let's do 5 sample journal entries because we need to have a really good handle on traditional journal entries before we start on adjusting journal entries. Big picture, we're talking about the accounting cycle. So we analyze a business transaction. Is there something that can be reliably measured in dollars? If so, we record that transaction using a journal entry. Debit means left, credit means right. One isn't good, one isn't bad, and every journal entry balances with equal amounts of debits and credits. Zach Talbot is an architect with a corporation, and these are 5 transactions that happened to them in the second half of October. On October 15th, they borrowed $64,000 from the bank, signing a note payable. For now, the only difference between a note payable and an account payable is a note payable is a written instrument, a written note that says, I owe you $64,000. What's happening to cash in this transaction? Our cash is going up because we're borrowing $64,000 from the bank. Cash is an asset, assets increase with debits. We write the debit first and write the $64,000. We come down the line, indent a little, and credit notes payable for $64,000. Any account that has the word accrued, payable, or unearned in it is a liability account, and liability accounts increase with credits. Second transaction is on October 22nd. We performed services for clients on account totaling $17,100. In other words, we did work. We satisfied some performance obligations. We earned revenue. If expenses are debits, expenses are debits, expenses are debits, the opposite of expenses is revenue and must get recorded with credits. So we credit revenue. We could have called it architect fees, we could have called it architect services, we could have called it consulting fees, we could have called it sales. Whatever it is, it's a revenue account, and revenue accounts increase with credits. We're not getting paid today, so we're not going to debit cash. We're going to receive money in the future. That's called an account receivable. Accounts receivable, like cash, is an asset and increases with debits. We put the date, we wrote the debit first, came down the line, indented a little, wrote the credit, and then wrote a little memo to remind ourselves what just happened. Next transaction on October 28th, we received cash from customers for whom we had done work previously. We received money on their accounts. We had sent them a bill, we call that an account receivable from our point of view, and now they're paying us back. What's happening to cash? Cash is an asset, assets increase with debits, and we're getting $10,300 of cash. Accounts receivable is an asset account, assets increase with debits and decrease with credits. So we decrease that account receivable on our books by $10,300. We write the date, we write the debit first, we come down the line, we indent a little, and we write the credit. We don't debit and credit sentences, we debit and credit specific accounts, and if we want to write a sentence, we put it in the memo section. The next transaction, we receive in the mail a bill for $1,450 for utilities. That applies to the month of October. We got the bill in October, it's for the month of October, but we're not going to pay it until November. We need to record it today because that $1,450 of utilities expense belongs in the month of October. So on October 29th, we debit utilities expense because expenses are debits, expenses are debits, expenses are debits. But we're not going to pay it today with cash, we're going to pay it later. That's called an account payable. So we debit utilities expense for $1,450 and we credit accounts payable for $1,450. Any account that has the word payable, accrued, or unearned in it is a liability account and increases with credits. Please note that I put the revenue and expense accounts, in other words the income statement accounts, in red font to help us remember that revenue and expenses appear only on the income statement, not on the balance sheet. Finally, on Halloween, we pay the monthly salaries for the month of October of $10,100. We're going to be paying that in cash. Why don't you pause this video and see if you can compose that last journal entry. I hope you got it. Expenses are debits, expenses are debits, expenses are debits. So we debit salary expense for $10,100. Cash is an asset. It increases with debits and decreases with credits. So we wrote the debit first. We came down the line. We indented. We wrote the credit. And we debited and credited specific accounts. If we felt the need to write a sentence or a phrase, we put it in the memo section. All right, I hope that helps.